Have you heard about the recent surge in Bonk's price? In the ever-evolving world of cryptocurrency, there's a new kid on the block that's making waves: Bonk. This meme coin has recently seen a staggering 52% surge in price. This is no small feat in a market that's as volatile and unpredictable as the world of crypto. The surge in Bonk's price has been coupled with a positive social sentiment and an increase in trading volume. This uptick in activity comes in the aftermath of Bitcoin's halving, a key event in the crypto calendar that's known to shake up the market. But let's delve a little deeper into Bonk's internal structure. Despite this impressive price surge, Bonk's internal structure remains bearishly biased. In layman's terms, this means that despite the upward trend, there's an underlying sentiment that prices could fall. However, the higher time frame structure of Bonk presents a different story. It's bullish. This suggests that over a longer period, prices have been trending upwards. Now, it's important to remember that cryptocurrency is a complex beast. It's not just about price surges and trading volumes. Other factors come into play, like the simple moving averages and the demand zone, both of which can act as potential support levels for Bonk. The accumulation distribution indicator, a tool that provides insights into the supply and demand of a particular stock or crypto, currently favors buyers when it comes to Bonk. However, there's a waning open interest, which suggests a lack of bullish conviction among speculators. So what does all this mean? Well, it appears that the bounce in Bonk's prices is likely driven more by the futures market rather than spot demand. This makes a bullish recovery challenging in the near future. Stay tuned to understand what these market dynamics mean for Bonk and if it's the right time to invest or cash out. Let's delve deeper into Bonk's market indicators. It's a fascinating landscape, so let's start with simple moving averages and the demand zone. These two elements are seen as potential support levels for Bonk. Just imagine them as the safety net under a trapeze artist, ready to catch the coin if it starts to fall. The simple moving averages, or SMAs, are calculated by adding up the last X period's closing prices and then dividing that by X. When it comes to Bonk, these SMAs have been showing some interesting trends. They're not just random lines on a graph, they're indicators of where the coin might be heading next. Now, let's talk about the demand zone. This is an area where buyers are likely to step in and support the price, preventing it from dropping further. In Bonk's case, the demand zone has been acting like a solid wall of support, helping to prop up the coin's price. But it's not all rosy in the garden of Bonk. The accumulation distribution indicator, or AD line, has been favoring buyers. This suggests that more people are buying and holding on to Bonk rather than selling it. However, this is where the plot thickens. Despite the AD line favoring buyers, there's been a waning open interest. Open interest is the total number of outstanding derivative contracts, such as futures and options, that are yet to be settled. In simple terms, it's a measure of market activity. A declining open interest suggests that there is a lack of bullish conviction among speculators. In other words, traders may be less willing to take on risk and are perhaps becoming more cautious. So we have a situation where the SMAs in demand zone are providing support, the AD line is favoring buyers, but the open interest is falling. It's like a tug of war with the rope being pulled in different directions. Now let's understand what drove this recent price bounce. What's behind Bonk's recent price surge? Well, it appears that this unexpected surge in Bonk's price is not primarily driven by a surge in demand in the spot market, but rather by developments in the futures market. You see, the futures market deals with contracts to buy or sell a specific cryptocurrency at a future date and at a predetermined price. As such, it's often seen as a predictor of where prices are headed. The increased trading volume of Bonk futures contracts indicates that traders are betting on Bonk's price to continue rising. This speculation in the futures market can often lead to short-term price increases, as traders buy up the coin in the hopes of selling it at a higher price in the future. This is likely what's driving Bonk's price surge. However, it's important to remember that this type of price increase can be somewhat unstable. It's not driven by a fundamental belief in the long-term value of Bonk, but rather by short-term speculation. If these speculators decide to sell off their Bonk holdings, it could lead to a rapid decrease in price. This makes a bullish recovery, a sustained increase in price, somewhat challenging in the near future. In addition, the accumulation distribution indicator, which measures the balance between buying and selling pressure, favors buyers. However, the open interest, a measure of the total number of outstanding futures contracts, is waning. This suggests a lack of bullish conviction among speculators, further complicating the potential for a sustained price increase. Looking at the broader picture, the internal structure of Bonk remains bearishly biased, despite the price surge. The higher time frame structure, which takes a longer-term view of price movements, is bullish, indicating potential support levels and a positive outlook. So, what does this all mean for Bonk's future price movements? Well, while the short-term outlook is bullish, the underlying trends suggest that a sustained recovery may be challenging. This makes Bonk a potentially risky bet for those looking to cash in on the recent price surge. So, should you ride the wave or cash out? Let's discuss that next. The big question is, should you ride the Bonk wave or cash out? As we grapple with this question, it's crucial to bear in mind that the crypto market is a complex beast, filled with unexpected turns and steep drops. The recent surge of Bonk is a textbook example. With a whopping 52% increase, it's tempting to dive in and ride the wave. But let's pause for a moment and consider a few factors. First off, remember that while the price surge is impressive, the internal structure of Bonk remains bearishly biased. This means that despite the bullish, higher time frame structure, the long-term outlook is not as rosy. It's like a surfer spotting a massive wave. It might be thrilling to ride, but the risk of a wipeout is real. Then there's the matter of market indicators. The accumulation distribution indicator might favor buyers for now, but the waning open interest suggests a lack of bullish conviction among speculators. This is akin to seeing a crowd at the beach, but few are actually braving the waters. The enthusiasm may be there, but the action, not so much. Furthermore, it's important to understand that the bounce in prices has likely been driven more by the futures market than spot demand. This makes a bullish recovery challenging in the near future. Think of it as a wave that's been artificially inflated. It might look good, but the substance isn't quite there. Finally, and perhaps most critical, is to consider your personal financial goals and risk tolerance. The world of crypto is exciting and dynamic, but it's not for the faint of heart. It's crucial to make informed decisions based on your own comfort level and objectives. Are you looking for a quick profit, or are you in it for the long haul? Are you willing to take on the risk, or would you rather play it safe? Remember, the information provided is an opinion and not financial advice. Always do your due diligence before making any investment decisions.